Good evening, traders and investors. Will back here with another one, coming to you with a Monday market recap. Hopefully you guys had a very good day in the markets today, and that you had a very nice weekend as well. In today's action, well, the S&P closing at new all-time highs. Very good market performance, especially when we take a look at the broader market here, guys. The heat map looking pretty good, broad-based performance, and your market breadth overall in terms of the percentage of stocks participating in the rally also coming into fresh highs. 64% of all stocks above their 20-day EMAs. That's very healthy. In terms of the percentage of stocks above their 50-day moving average, something very closely watched by the institutions, that's at 67%. And even the percentage of stocks above their 200-day moving average, the longest moving average that people pay attention to, also clipping into new highs right now at about 63%, which is arguably better than we had earlier in September, when a lot of the hottest tech names in the world were pushing new all-time highs. So this all-time high, as we've been saying in recent videos, it's much better than the past all-time high back here because the market is more broad. However, we are coming into a very busy earnings season, so it raises the question, is it still time to buy the dips on some stocks that have been left behind, or are we just maybe a little bit too far extended? In today's video, we'll take a look at all of that. So speaking of today's video, number one, we'll go through some news articles which kind of rocked the market early throughout the day today. It did result in some early morning weakness. As you can see, the S&P over the course of the morning did start off with a big gap down open, and then the buy the dip crew showed up in a very big fashion, pushing it green towards the end of the day. So we'll cover some news elements and what exactly happened in the markets today. Thereafter, we will go through our sector rundown, the S&P, the Qs, and most minor sectors. Take a look at the rotation and where the money is flowing. Thereafter, we will take a look at our big tech names. Do the same thing. Go here across the big tech names and derive which of these tech names are positioned well into their earnings, which of them can still be some nice buying opportunities. Towards the end of the video, we're going to take a look at our biggest gainers and losers. Of course, there were many on a day like today as well. Many names to the downside in the red, and many names, especially some of the fan favorite retail names, more specifically some of the data center names, pushing highs after being muted for a while. So we'll take a look at these biggest gainers and losers of the day at the end of the video. And at the very end of the video, I'll take you guys through my portfolio and which positions I'm carrying into the rest of the week. And that's going to be it for today. So let's get into it, shall we? So today, the S&P up about 0.16, the Qs up 0.08. I already showed a glimpse of the heat map, but just to reiterate here, guys, decent day. Now, there were a few key names that were moving down today for certain specific news reasons, which we'll get into in a few moments. Financials mixed across the boards. The banks and the credit cards, well, obviously those were down after President Trump's comments last Friday after the close of wanting to bring credit card rates down to a maximum interest rate of 10% for the next year. So the banks and the credit card issuers getting hit by that piece of news right there. And overall, the financial segment fairly mixed. Big tech also somewhat mixed. We had some decent performance by Apple, Google, and Tesla today, but we were missing a few key big players here, such as Meta, Amazon, Microsoft, and even NVIDIA ending the day a little bit flat. Consumer defensives continue to be a highlight of the market. Many value-oriented and dividend-oriented stocks having some really nice performance in the past few weeks as the market broadens out, and the bottom half of the market, pretty decent day as well. In terms of your one-day relative performance, you can see that even better to where most of the market was pushing higher, led by materials and consumer defensives. Materials, as more and more mining companies rally to new highs after silver and gold hitting their own all-time highs over the course of the day today. Technology was in there, but not the best performer. To the downside, the only two sectors, healthcare and financials, but those are important because they're very big weights in the S&P. Today would have arguably been a lot better if we did have those two sectors participating as well. 1 week relative, guys, you are sitting pretty nicely right now at the highs, right? Very nice broad market performance, excuse me. To the downside over the past week, only energies and financials down a little bit, which leads us into greed category in the Fear and Greed Index. It's been a long time since we've seen green on here, all right? In the past few months, such as, early November into maybe mid-December, we were either in extreme fear and then into fear. And it seems as though the past month, we've kind of been stuck in the neutral category. Now the market broadening out a little bit more and inching into the greed section. So we'll have to pay close attention to how this story develops, but I would not say the markets are super overextended when we take a look at a few things right here in terms of your momentum indicators or the stock price strength indicators, right? We know that there are decent pockets of the market pushing new all-time highs, but still not everything. The breadth has been improving, but it's not run away broad market performance, right? No, just continued rotation on a daily basis. So before we get into more technical analysis, guys, let us run through our news segments right here. And there's a few key interesting ones over the course of the weekend, right? Number one, we're going to talk about the big one here. Of course, the Department of Justice investigating Federal Reserve Chair Jerome Powell because of the comments that he made a few months ago when speaking to Congress about the renovations to the Federal Reserve buildings. And this infamous picture became a meme pretty much at that time. This was over the course of the summer of 2025. And now the Department of Justice launching a formal investigation into whether or not Jerome Powell committed perjury when he was talking about the styles of renovations that were to be made on the Federal Reserve building and whether or not those were to be fit within an adequate budget or not. So the DOJ launching an investigation over that. And thereafter, yesterday evening, we actually got Jerome Powell recording a very rare video. It's very rare for a Fed chair to kind of comment directly on some of these things. But he pretty much put out a 2-minute video last night saying that he did believe that this investigation was politically motivated, but that he stands firm in terms of what he said at that time, and that it's in the Fed's best interest always to stay apolitical, and basically kind of putting the ball back in the DOJ's court saying, well, you guys are being very political with me, but I'm not going to be very political with you. Obviously, I'm paraphrasing. You guys can watch that video on your own. But of course, that was the reason for some of your declines very early morning. Now we know that a few other things transpired over the course of the weekend as well. Number one was this one right here. Donald Trump announcing a 1-year cap on credit card interest rates of 10% effective January the 20th. Now, he doesn't necessarily have the executive powers to do this overnight. It does need to be put through Congress, but this is just one more push in terms of the affordability narrative for this upcoming year. We know that it's a midterm election year, and usually during midterm election years, the president will focus on the things that the people want to see the most. In this case, because of the K-shaped economy right now, it's going to be all about affordability. And this is just one more thing that the president has put out over the course of the past week. There's been many, right? This 10% credit card cap in terms of interest rates, banning institutional purchases of single-family homes, buying $200 billion of mortgage bonds to lower rates on mortgages for homes, calling the Fed to cut interest rates to 1% in 2026, which may go in line with the DOJ investigation, right? I'll let you guys kind of do that math on your own there. Making $2 per gallon in gas prices a top economic priority. $2,000 tariff stimulus checks as well. So obviously, affordability is front and center for the administration during this midterm election year. And I expect to see many more headlines like this as the president makes an appeal to the population in terms of wanting to address several key concerns that consumers have been having over the course of the past 1, 2, 3 years. Now, moving on a little bit further, we got another one tonight. President Trump saying U.S. large tech companies must pay their own way for the rapidly rising electricity costs due to data centers. Trump says that Microsoft is first up and that they will make major changes over the course of this week. Trump is going after electricity costs. Once again, another push towards the affordability narrative. Moving on a little bit further here, you got more news releases by the president today. Trump saying that any country doing business with the Islamic Republic of Iran will pay a tariff of 25% on any and all business being done with the United States of America. This order is final and conclusive. That was released at 4:46 p.m. Eastern, so after the market closed, but I figured it should be quite interesting because this is the first big piece of tariff news that we've had in a while, just a tariff by proxy, essentially. You might remember the last one was anybody who was going to buy Russian oil would face a 25% tariff. Shout out to India, right? They were kind of caught up in that mess. But here you have another headline in terms of tariffs. Moving on a little bit further here in terms of some tech news. Well, Apple picking Google's Gemini to run AI-powered Siri coming this year. Now, this is not new news. We had some rumors of this back in November, to where Apple was going to use Google's Gemini services to power Siri because, let's be honest, they haven't really been able to build a good Siri on their own, but interesting to see. And we know these two companies have had a long-standing partnership for the longest time at this point. Google has been paying Apple to be the default search browser on Apple devices, and now Apple kind of going the other way and requiring Google's help for some AI building in terms of Siri and other AI ventures. So this is really, really nice news today, and it did help both stocks a little bit over the course of the session. Moving on a little bit further, we have another Paramount and Netflix narrative. This time, Paramount filing a lawsuit against Warner Brothers to get them to disclose greater financial information about the Netflix deal. They also plan to nominate Paramount-friendly directors to Warner Brothers board who they believe would vote against the deal with Netflix. So they're also saying in the lawsuit that the Warner Brothers is withholding information from shareholders in terms of who has the best deal, Netflix or Paramount. And at this point, guys, it's just kind of very noisy in terms of this deal. So we'll have to see the final resolution. But you know what's funny is during the process of this deal, both companies have gotten absolutely killed, right? Netflix down sequentially, and even Paramount, right? Even Paramount, since they've been going after this deal, man, both of these companies' stock prices is just going through the floor as they kind of do battle for their Warner Brothers assets. So moving on a little bit further here, we do have another piece of news. Mark Zuckerberg coming out with this tweet today, changing some things up at Meta. Today, we're establishing a new top-level initiative called Meta Compute. Meta is planning to build tens of gigawatts this decade and hundreds of gigawatts or more over time. How we engineer, invest, and partner to build this infrastructure will become a strategic advantage. So this has been one of the criticisms of Meta in most recent times, the fact that other hyperscalers such as Microsoft, Amazon, and Google, they have very large cloud services. And Meta has been building all of these data centers at a tremendous cost to them, but they don't have any cloud infrastructure or cloud hosting services of their own. And now they will be deploying all that excess power to create a cloud initiative. So nice to see that Mark Zuckerberg is kind of joining the other hyperscalers in this venture. In terms of my personal opinion, I think that's going to be a much better allocation of capital and allocation of resources than their Meta Reality Labs project, which has cost the company billions of dollars over the course of the past 4 years. And now, last but not least, I thought that this one would be fairly interesting. This user right here spotting something very curious. NVIDIA is so far ahead that even its 2-year-old chips still outsell the rest of the industry combined. Here are your sales numbers for NVIDIA. I will just move myself to the side just so you guys can see the magnitude of all this, right? So previous generations, as highlighted by these brackets right here, previous generations of NVIDIA over this most recent quarter, Q3, have outsold everything else combined, whether that's Google's TPUs, AMD, Huawei, and even Amazon TPUs as well. I thought that this was absolutely staggering. So if you were ever questioning NVIDIA's dominance or questioning whether or not NVIDIA would have a good year this year, I think the answer is fairly clear. If it wasn't clear at the CES conference in Las Vegas last year, well, maybe this chart will help you out a little bit to determine who has the strongest moat in terms of their not only computing prowess, right? Their hardware advantages, but also the CUDA software ecosystem, which in my opinion is the true moat. Those were all your news headlines of the day that I thought would be interesting. Some of them moved the markets today. Some of them were just interesting facts. So hopefully you guys enjoyed that. Now let's dive into some charts, shall we? So taking a look at the good old S&P 500. Where do we stand right now at the all-time highs? Well, it's a very good all-time high. We know that market breadth is very solid, and we do have a nice daily uptrend underway. So any move lower because of XYZ reason this week, just looking for a higher low. Do we have any catalysts in the first place to actually cause a bit of a downfall this week? Well, there are a few. Number one, we come into a bit of a volatility event tomorrow, which is going to be the CPI. I don't really believe it's going to move the markets that much. The expectation is for 2.7% inflation year over year, which will be roughly the same as last month's release. If you take a look here at the Trueflation Index, though, that measures about 15 million products on a daily basis, well, we can see here that the inflation rate has come down significantly since this same period of time in December. We're now down to about 1.87%. So I do not believe that inflation will be front and center for the markets over the course of this year. No, this year is probably going to be all about jobs. So this one's still something to pay attention to, but I'm not expecting a hot release tomorrow. We also have PPI, producer inflation, and retail sales numbers coming in on the Wednesday session. And that pretty much ends it for the week, guys. After that, Thursday or Friday, there's really not much other than a few Fed speakers. So those are two little volatility catalysts to pay attention to, which could derail the markets temporarily. And then on the other hand, we have a few earnings to pay attention to. Tomorrow morning, JP Morgan starts off the bank earnings. And thereafter on Wednesday, we continue with Wells Fargo, Citigroup, Bank of America. And then on Thursday, Goldman Sachs, Morgan Stanley, BlackRock, and TSMC. So there are some volatility events to pay attention to: CPI, PPI, retail sales on the macro front. and then these bank earnings, of course, which kicks off earnings season. However, I do believe that the bank earnings should be pretty good in terms of their guidance because we are in a rate cutting environment. So we'll cover them all on the channel, of course. And then TSMC, I think TSMC is going to have fantastic earnings as well, reiterating demand, reiterating their very strong margins as well. So I don't really see anything that can possibly jeopardize the markets this week, but who knows, right? It could go either way, as these news releases always do, but at least we have some comfortable room here for a fallback location. Line in the sand remains 680, and that is deep into support, 684 down to about 678. So tons of space for the bulls to come back if they want to, and we're also not so far off the EMAs, right? We've kind of just been grinding higher here a little bit. The weeklies are looking pretty good, nowhere near overbought conditions on the weekly or daily timeframes, so there is some room for expansion. The monthly, though, a little bit extended, but I don't believe that unless you get a big market moving catalyst, like something bad in terms of macro, that we would embark into a monthly phase of consolidation just yet. So we're not looking too bad for this week. As a result, most of all the dips, especially on individual companies, are indeed still for buying opportunities, in my humble opinion. Moving on to the QQQs right now. Oh, by the way, the futures are red because of that Microsoft piece of news. You can see that most of the red is just largely concentrated down here into our big tech names because of those electricity concerns, right? Amazon, Google, Microsoft down a bit in the after hours, but that's the headline risk of the markets, right? I do believe that this will probably be resolved. Great for energy companies, just maybe not so great for short-term price action for some of the big tech names, but a lot of those big tech names are still in very nice buying locations, and we'll cover that in a bit in the video today. So the QQQs, guys, very nice daily uptrend worth of expansion right now. Higher lows, line in the sand set at about 610. Not too bad, right? Nice expansion, but on the weekly time frame, it's still an awkward tightening range. You're looking for the breakout here of 628, which would get your weekly uptrend into high gear. Not looking too bad, but you will need participation from big tech. And unfortunately, for a majority of big tech companies, guys, we just haven't had the expansion, right? Take a look at Broadcom right here. Very heavy weight in the indexes, right? Doing nothing for the past few weeks, and the list goes on, right? Apple at the lows, AMD somewhere near the lows as well. Amazon's like the only one that's making some form of an attempt to break out, but even them into a bit of a consolidation phase after a nice last 5 days of rally. I mean, Google is also trying its best to pull its weight, but you don't have Meta down there as well. You don't have Microsoft stuck down here. You definitely don't have Netflix. You don't have NVIDIA on the breakout highs either. Even Tesla has been somewhat subdued after their decline recently after releasing deliveries. So you don't have so many very large players really pushing weekly uptrends right now, which is why the QQQ is kind of trailing behind the S&P. Just something to pay attention to, which is why there are some very good deals in tech right now, because you haven't had that expansion on a lot of these companies over the course of the past 3 months or so. And moving on further to our XLF chart right here, financials down a lot today because of that credit card news, obviously. So we will see what happens. I do believe that this week will be all about earnings for these financial corporations as we stand right now, line in the sand, 54.36, looking for a higher low for possible further trend continuation. If we unwind everything with earnings and go for the daily downtrend, is it that big of a deal? No, the bulls have tons of space here on the weekly, right? Just looking for a weekly higher low for possible further trend continuation, looking pretty good there on the weekly timeframes. And the monthly is just a gorgeous monthly uptrend of expansion. Very nice macro tailwinds for financial companies into this year. So I am a very big fan of playing many of these sectors, right? Whether it's the SPGIs or Moody's corporations of the world, whether it's the Visas, the MasterCards of the world, also poised to have a very nice 2026, whether it's the insurance division, right, or the insurance segment of the market. It's been literally a 1.5 year worth of consolidation range right now. Insurance is just begging for a bit of a breakout to the upside this year. So there are many components within insurance that are indeed playable over the course of this year. Onto healthcare right now. Healthcare, a bit of a consolidation day, but still just hunting for a new higher low. Line in the sand, 153, looking for a new higher low, possibly into these guys right there. Higher low, maybe for further trend expansion. And even if you unwind this, guys, is it that big of a deal? No, you're just going to go into a bit of weekly consolidation, kind of a tightening range like you see on the QQQs right here. So healthcare is set up really nicely to go for the breakout if they want to, but even any consolidation wouldn't be too bad. Healthcare, probably one of your favorite sectors for 2026 as well, as the broadening out of the market continues. And you have a very nice engulfing move on the monthly right here. Any consolidation, guys, just a breakout retest, right? Cup and handle, breakout retest, however you want to label it. looking pretty good into 2026. Moving on to semiconductors right now. Semiconductors pushing the highs today, but it's without some of your very large players, right? Broadcom doing nothing, AMD doing nothing, NVIDIA doing nothing as well. So the rest of semiconductors are doing very well. However, the largest players are just somewhat muted, which does give us a lot of room, right? In the event that you kind of start losing some of your semiconductor equipment companies right here, or you start losing some of your smaller semiconductor players, well, at least you know that the big tech names, or rather the larger tech names in there, have a bit of room to the upside, right? So very nice daily uptrend underway right now. A line in the sand, higher low, 375.81. If you lose this, you're just looking for a weekly higher low, guys. It's been a really nice past few weeks of expansion for semis, and any push lower, probably just going to the previous all-time high backtest into the weekly 12 EMA for a bit of a breakout retest and possibly run trade. I would expect NVIDIA, Broadcom, and AMD to be catching up, especially as we inch closer to some of their earnings over the next coming month or so. Semis, still your hottest location in the markets right now. Moving on to the Russell also looking very nice in terms of the breakout, right? Beautiful reversal here, beautiful daily start to the engulfing move, and eventually when this consolidates, looking for a higher low, anything above 246, higher low, possibly for further trend continuation. We will see what happens, but this one is looking like it is gone at this point, right? Beautiful weekly upswing, weekly uptrend. So any weakness right now would just be looking for a back test, possibly of the infamous 250 location, which we literally just tested once. If we test it again, probably another re-entry trade for further longs. Not looking too bad. I'm not playing this one specifically, but I am playing individual smaller cap names, as I do believe that this market environment is conducive to small and mid cap growth, especially in a rate cutting environment, an environment where quantitative tightening is done, and especially an environment where you have a lot of fiscal stimulus this year, many different tax policies and deregulation policies that could lead the markets, or rather the growth segment of the markets, to have a very good year. Lastly, moving into some of our other sectors that we check on the rotation sometimes, right? Consumer staples. Pay attention to this one, guys, because we do have the weekly uptrend underway. We're challenging resistance, but broadly speaking, guys, this one has done nothing for the better part of the past year and a half. We've been battling back into previous resistance, which is now support, and I do believe that this one is looking pretty good for some expansion longs into 2026. Is it going to be the sexiest sector? No. Is it going to be the sector with the most amount of gains? No. But if we're looking to balance some of our tech gains of the recent years with a bit of value and a bit of defensives, not too bad at all, right? Take a look at the dividend ETF here by Schwab, SCHD. You can see a clear monthly uptrend, and this one is looking really good into 2026 with the broadening out of the market, the interest rates being cut essentially as well. That does usually favor the dividend side of the markets. So just pay attention to your value names and dividend names. If you wanted to accumulate some, it's not for everybody, but this could actually be a year in which we do see some nice trends start to emerge. Moving on to consumer retail right now, XRT looking very strong, right? Beautiful daily breakout, beautiful weekly breakout as well, and just looking for a little bit further. So this one as well, this is part of the broadening out trade for the overall market, consumer cyclicals and consumer discretionary. We know that we have many fiscal policies that will be seeking to help corporations and individuals alike in terms of the big beautiful bill, right? $4 trillion in tax cuts, but also the lowering of interest rates. So the market is trying to front run kind of the recovery of the bottom half of the infamous K-shaped economy, right? We know that there have been several good consumer trends as of late, such as travel, right? A lot of the travel names have been booming. Booking.com off of its lows, Airbnb, nice rallies off of its lows. The airlines having nice rallies as well. Some of the cruise lines having very nice rallies over the course of the past few months as well. So, and even something like Expedia too, right? So travel has been very solid, but what hasn't been very solid are restaurants and overall fashion brands, right? So we might be able to see some broadening out of XRT. If you don't know which company to play, you can always play an ETF like this if you're going for the broad thesis. So keep that in mind. On to utilities right now. Utilities still a little bit soft, right? We'll see how they react tomorrow to the news from the Trump administration, but utilities are a bit of a mixed bag, right? You got the legacy utilities for consumers and businesses, but then you have the independent power producers as well within utilities, right? So weekly downturn right now, they're just going for a bit of monthly consolidation into the 12 EMA, looking pretty healthy. But if I were playing any utilities this year, I'd probably be playing some of the independent power producers, such as Vistra, right? Pay attention to Vistra, guys. Weekly MACD softening out. They look like they want to kind of go for this one right now. It's been months and months of consolidation into the 12 EMA, previous resistance, newfound support. These independent power producer utilities, this one, you can think of a Constellation as well. A lot of them are presenting beautiful backtest locations into key areas of support, or just looking really good for the re-expansion trade, right? So those are a few that I'm looking into for utilities this year, as we know power is going to be front and center. And now lastly, moving into real estate. So real estate, this is just a whole bunch of REITs. There's many ways to play the real estate trade, right? It's been finding a base of support for the longest time, but we know that there are many different aspects to this real estate trade. Two of the ones that I prefer the most are mortgages. Companies like Rocket Mortgage having a really solid start to the year. Any back tests here will get me interested for possible further longs. And even some of the home builders have been doing really well recently. We were commenting on this back test of support, right? Breakout, retest. Well, I mean, they're trying to reset the trends, right? This was obviously a lost monthly uptrend, and now you're going for the two-step recovery process. Home builders and mortgages could be the more interesting areas of real estate over the course of this year. So just pay attention to them. And once again, even for something like home builders, right? Am I going to necessarily choose either Lennar or DR Horton or Toll Brothers or KB Homes or others like that? Or would I rather just play an ETF? I would just rather personally play an ETF. That way I'm sure that I don't have any company specific risk and I don't choose the wrong home builder. If you ask me my opinion, probably Toll Brothers is a bit better positioned just because of their penchant to sell to a more luxury client. So that one would be arguably my favorite. But if I'm looking to play this entire sector, still decent. I mean, it's not late yet, but you're kind of getting there. It's kind of last call, right? We were calling out this one back here for like months and months and months. Maybe some of you guys were able to position. And last but not least, energy. Obviously, energy has gotten pushed and pulled over the course of the past 2 weeks because of the Venezuela news. But you can see here, this XLE ETF, which is a lot of oil companies, well, they've just been kind of moving sideways. We're still pending the breakout on this oil trade overall. If you ask me, am I playing energy? Well, yes, but not this way. I'm playing it with midstream pipelines for LNG access to the data centers, but you can also explore some renewable energy ETFs, such as NUKZ, which is for nuclear, right? Nuclear coming back, coming strong right now. So we can play some of the nuclear specific names, but even some other renewable names, such as solar and other things of that nature, or battery storage deployments. Those are also very key narratives and very key niches that you should be paying attention to over the course of this year. Energy is going to be a very big narrative throughout 2026, and I'll bring you names here and there. You guys probably know a few of them, but if you're not familiar, maybe I'll bring a few more of them towards the end of the video. And now moving on to the VIX. Well, the VIX actually had a nice little pop this morning, but then gave it all back. The pop was, of course, due to this news with Jerome Powell and the DOJ investigation. And the bulls were able to kind of make quick use of that, bidding up the markets. But then at the same time, volatility was a bit on the decline. You have a few volatility events this week, such as CPI tomorrow, PPI on the Wednesday session, and of course, some of the bank earnings. Any mishaps in those reports can bring up volatility a little bit, especially if it's a quick and fast move, right? That being said, volatility is still super low. So when the volatility is low like this, you're just looking to accumulate some possible positions on some stocks that haven't rallied so much. And you can do that through leap call options on some of your favorite names that haven't ran so much, leap call debit spreads and things like that. And obviously, if you see a temporary VIX spike like we had early this morning, if you guys watch the top 5 options list, it was a beautiful opportunity to benefit from this 15% increase in the VIX and some rapid declines on some names that we identified yesterday in the top 5 options videos, such as AMD, very early morning. You got the 190 strikes that we were looking for. NVIDIA, you got the mid 170 strikes as well, which we were looking for, and many other companies that I highlighted in yesterday's video. It was a phenomenal time to possibly throw out some bids there for some short puts on these micro VIX spikes. Moving on a little bit further here to other assets, we're going to talk very briefly about gold and silver, of course. So gold, brand new all-time high, very strong breakout by the bulls right now. Daily uptrend, full bull control, and just grinding away at these EMAs, looking very strong. Any pullback guys looking for a higher low, anything above 44.12 looking for that higher low for possible further trend continuation. Bulls in control of all time frames. Monthly, we know it is deeply overbought, but until you lose the daily and weekly time frames, you can't say that this is the local top, right? The trend is your friend, and for now, the trend is definitely in the bulls' favor on the daily, on the weekly as well, with the higher lows being set at 4,300 roughly. And I got one little statistic for you right here. This one right here. Central banks, gold buyers have picked up the pace in recent months. So central banks still remain a key player in the price action of gold recently, as I showed you a statistic and chart last week of the dollar being less and less of the default reserve currency or asset, right? It is now moving more and more into gold in terms of total holdings across foreign government entities. So keep that in mind. You have a lot of central bank issues going on here. And then we talk about silver as well, right? Silver hitting a brand new all-time high. Congratulations to the silver bulls out there. Nice back test, right? This one right here, back test in previous highs, higher lows being set about 74, let's call it. Beautiful daily uptrend right now, and any move lower just looking for a new higher low. I know the silver bulls want 100. Does it come tomorrow or in the next week or maybe a bit longer? That is the million-dollar question, of course, right? On the weekly time frames, bulls control everything, but be mindful, guys. You're still very overbought on the RSI. You're still very overbought on the weekly and monthly RSIs combined. So is now the best time to start a silver position? Arguably not, but this is the perfect type of trade that if you're in, you can set trailing stops, right? Below your most recent higher lows. And at least then if you lose the daily and embark into further weekly consolidation, at least you won't have to ride it down all the way until its final resting zone. At least you can kind of lock in some profits along the way. And then of course, the big one of this year is going to be copper because of the data center requirements, not only throughout this year, but also into the next few years as well. So copper could be interesting, whether you guys want to play that through an ETF or through direct copper spot exposure. That is completely up to you, but I would have a look at copper over the next year or two, because now people are starting to talk about it. I mean, we're not expecting something like a silver boom, right? Not expecting a 2x in like record time, but this one could be a very interesting thing as the whole metals and critical minerals trades expand. So looking very good there across most elements today. Moving on to other assets such as Bitcoin and crypto. Well, doing a whole bunch of nothing, guys. There's really nothing much to report right here. We're trying to go for the daily uptrend, but there's just no action, right? I need to see a break above here of 94,000, break and close above for a nice new weekly uptrend. I mean, the momentum is kind of slowing down to the downside, but we know that just from looking at the chart, right? But you do need a clear breakout right here, because right now it's just a whole bunch of nothing. Still monthly consolidation around the 26 EMA and into support, and just no clear trend. I mean, the bulls have all the chances in the world of trying to go for this. Let's see if they can actually put something together. So I would not want to participate on this one in terms of short-term swings unless I'm putting a stop loss below here, because if it gets invalidated, well, you know that we might just be going one step lower. And then, of course, the take profits would be into your resistance range, which is roughly between 100 and 105. It's these guys all the way up here, yeah? So if we are trading this one on a swing, we got to trade it with a stop loss, but no clear breakout. Some people would rather wait for the breakout to happen to take action. Moving on to the Ethereum trade right now. Ethereum's the same thing, right? They're trying to go for the daily uptrend breakout right now, but it's just unclear. On the weekly, it's just sideways range-bound action. Very boring price action here for the cryptocurrency market. So it's unfortunate, but it is what it is, right? Now, these two assets are arguably long-form accumulation ranges, meaning that short-term swing trades are kind of off the table because there's no momentum, there's no velocity, and there's not that much attention on them. They should be traded with stop losses, if anything, or just maybe looking for the longer form accumulation positions. But as of right now, no new trend changes to report, so we'll kind of just jump over them for the time being. That being said, that's everything for your overall market rundown. Hopefully you guys enjoyed. Now let's dive into some charts in terms of big tech. So we're going to run through these quickly as well because not much has changed. Apple having a nice little bounce today out of oversold conditions with that Gemini news. Oversold conditions on Apple on the daily time frame is quite rare and can be synonymous most often unless you're in a massive tariff situation, right? More often than not, it is synonymous with a local low on the price. So that being said, we could be looking for Apple to have a bit of a bounce, but who's in control? Still your bears, right? You're still looking for a lower high, possibly out of resistance, mid 260s. And then it's up to the bulls to change the trend. So one thing at a time. Daily downtrend still in favor of the bears right now and still in big weekly and consequently monthly consolidation. Now, Apple does have earnings coming up at the end of the month and they should be having a pretty good Q4. Is Apple a buy right here for a swing trade? I wouldn't go that far, but the way that I've been playing it is that when we did have daily oversold conditions, I was writing the 250 short puts as it is into the monthly 12 EMA, into a very nice previous area of resistance and now support, just looking for the monthly breakout retest and possibly run throughout 2026. Apple's valuation down here at 250 is still a little bit high to be adding some shares, so only selling some put options for me right now, no call options or things of that nature. Moving on to AMD right now, AMD also not doing too much of anything, right? Trying to establish some form of a triple bottom right here around 200. That being said, the price action on AMD is also somewhat quite confusing, right? No clean trend right now. They tried to go for it, got rejected, once again back to the lows. The weekly time frame as well is somewhat flat and muted, but this is just a part of monthly consolidation. We know that monthly consolidation has been underway now for 3 months, but the one thing that hasn't gone down is the company's fundamentals. Fundamentally speaking, around 200, AMD is still a fantastic buy for some longer term shares, but even on dip events like today, where you get a bit of an increase in the VIX and you get some lows printed about around 200, my favorite way of playing this one, selling put options down here in the 190 area. That's very close to the 12 monthly EMA, which is curling up, and prior resistance, which is going to be current support. So that's the way that I'm playing AMD. In terms of any leap call options, I already have some from back here, so I'm not adding any more, but nibbling on some shares, looking for that big expansion, still probably a worthwhile endeavor, as this company probably has much more to go to the upside over the next 2 years. Moving on to Amazon right now. Well, Amazon was green for a majority of the day, but sadly, falling off in the last hour of trade right there. Moving on a little bit further here, nice expansion leg, right? Beautiful upswing on the daily and cracking through the great wall of resistance that was the 240 to 230 zone. Now, any back tests here would be very natural, right? Just looking for the breakout, retest, and possibly run. So this may be last chance to dance on Amazon. If it does provide a little bit of a retest right here, short puts around the 230 range, I wouldn't be opposed to even adding a couple more shares, going for the continuation leg on Amazon. The monthly time frame is looking really good for some possible expansion. We'll see what they have to give to us in terms of earnings over the course of the next few weeks, as the company does report at the end of the month. And valuation is still around 235 is manageable. 1.5 peg and a under 30 forward multiple with beautiful expansion across all lines of business. On to Google right now. Google up 1%, of course, because of that Apple news. Google, very strong. Bulls in full control of this time frame as well, and looking for a bit more. New all-time highs. Super strong on Google, but also super difficult to position all the way up here, right? For a few different reasons. Number one, you're extended on all time frames, right? Very overbought conditions on the weekly, very overbought conditions on the monthly. Just not something that I enjoy positioning when I know the risk reward is not favorable. As well, you do have a fairly high multiple. This is the higher end of Google's trading range, trading close to a 30 forward PE and a 1.9, almost 2 peg right now. So no positions on Google for me, but I'm not selling any shares right now. That being said, it is a nice opportunity if you do have any swing trade options on it, right? In terms of call options that are up a ton, or possibly shares that you're trading that are up a ton. There are many other aspects of the market, especially in big tech, that we can kind of reposition in if we do want to take profits on Google right now. But fantastic run. I'm not selling any of my long-term shares, just any swing trades right now. Decent take profit areas, in my opinion. Moving on to Meta right now. So Meta down 1.7%. They were actually not doing too bad throughout the day, but the last hour of trade kind of dropped them on that cloud news. I guess the market didn't like it. I liked it, but I guess the market didn't like it. That being said, Meta's price action is kind of just all over the place, right? In a support right now, 640 down about 630. We'll keep an eye on how they react to this support location. If you break down under, of course, you're going back to low 600s. Now, Meta has just been consolidating on the weekly, not doing too much of anything, right? Sweeping weekly downtrend after last quarterly earnings. And after last quarterly earnings, I said it was probably going to be dead money for a while until Mark Zuckerberg addressed these CapEx and expense profiles right there. That being said, Meta, in my opinion, around 630, still a good location for longs, especially with that cloud news. That's a nice revenue driver for the company into the future, right? So this really makes me happy as a Meta shareholder. The price action obviously is very soft, very choppy, and kind of very boring at the same time. But as a shareholder, obviously this news should make you happy that they're going to deploy their assets, that they've been, that the market's been concerned that they're spending too much money, right? The concerns of Meta recently have been they're spending all this money for data centers. What are they going to use them for? Well, now you have your answer, right? So as a result, I do believe Meta is a buy, and we're currently still just in monthly consolidation around the 12-month EMA. So short puts down here, if you have a big account, very decent. Pay attention to this lower $600 area, or even accumulating some shares for the long-term portfolios around 630 at a low 20s forward PE and a 1.6 peg. Decent valuation for a very strong company. Moving on to Microsoft right now. Microsoft down 0.44%, but still nothing to say on Microsoft, right? It's just doing a whole bunch of nothing. You're going to need a breakout either way, either break towards the highs, 490, and challenge this resistance zone, or break down below, and we will start challenging perhaps the 450 range of support, which is below us right now, 450 down about 430. Still anybody's game. So we will pay close attention to this one and see which direction it breaks. If we break to the downside, indeed, I will be selling some short put options and adding a bit more to my longer term Microsoft shares. It's just been very healthy monthly consolidation. You can see we're battling with the 12 EMA. Usually buying Microsoft around the 12 EMA in context of bull markets has been a very profitable endeavor in the past. So definitely between here and the 26, 470 to 450 pocket, I want to participate buying some longer term shares or possibly some leaps and selling some put options. This is definitely one that is front and center on my list. Under a 34 PE and a 1.66 peg. The valuation is good. Nice pullbacks right here and fairly muted price action. So if we break to the downside, it is probably going to be one of our last opportunities to pick up Microsoft in a very solid location. And that would be a sell-off from top to down there of almost 20%. If we can't buy Microsoft 20% off the all-time highs, I don't know what we can buy nowadays, especially because their earnings are just so solid, right? Moving on to Netflix. Netflix getting pushed and pulled around today again because of the Paramount news. Daily oversold conditions on Netflix, weekly oversold conditions as well. When's the last time that happened? A very long time ago, other than not even during tariffs, as a matter of fact. I stand corrected. It was actually the 2022 lows. And prior to that, you'd have to go back to down here and down here. Now, Netflix is not in such a dire position as back here. So if I had to derive a close comparison, it would probably be these two instances. I do assume the stock is very close to having bottomed out so far. You got one more support range below us, 86 down to about 82. I do believe that that's possibly going to be the final resting place for Netflix. The stock is now down 33% off of the all-time highs. It has earnings next week. And I do believe next week, Netflix is going to remind everybody why they're such a solid company by posting very solid ad tier numbers, revenue numbers, profit numbers, and free cash flow numbers. But they will probably get a lot of questions from analysts in terms of the structure of the deal and how everything's going behind the scenes. If you want to buy Netflix right now, is it a good deal? Under 90? Yes, it is. 28 forward price to earnings, a 1.4 peg, and a 2.25% free cash flow yield with good management's guidance by 2030, right? End of the decade guidance is to be $1 trillion company. So it's not often that you can buy $1 for 40 cents, but this would be one of those times, right? $1 trillion market cap, trading at about $1 trillion market cap forecast from management, trading for only $400 billion right now. So attractive position on Netflix. And I wasn't always able to say that, right? I didn't want to buy Netflix this entire time here, but as soon as it started cracking under 100 or lower, that's when I really started adding to my position for the long term. Moving on to NVIDIA right now, another company that just is unable to break out, right? This whole 185 to 180 segment, or 178 rather, is a magnet. Big previous resistance, support, resistance, and now support again. So in spite of all the bullish headlines surrounding NVIDIA recently, it's just not able to break out, right? The bulls are clearly going for something, trying to set the daily uptrends in motion and also trying to set the weekly uptrend back in motion. But so far, no go. That being said, is NVIDIA a good buy at these locations? I do believe so, in my humble opinion. Any consolidation weakness, great opportunity to sell some put options under there, closer to the bottom end of support, 170 down to 165. Very solid opportunities on NVIDIA the most recent few days to be selling some put options down there. Wouldn't mind being assigned, wouldn't mind adding to my shares position either, or maybe going for a swing trade with some leap call options as well, because we know that NVIDIA has just done nothing but raise its guidance recently. This has just been a very awkward accumulation range for the past 6 months. The valuation around 175 or low 180s is pretty good, right? Low 20s forward PE. It's a 1 peg. NVIDIA at a 1 peg. I know it's actually one of the cheapest stocks in terms of PEG ratio across all the Mag 7 names, and even extending into many other tech comparisons as well. So I do enjoy NVIDIA a lot, and I do believe they're just going through a natural phase of monthly consolidation, which will undoubtedly result in a nice expansion leg when they're ready, right? So we'll see what happens. Moving on to Tesla right now. Tesla, decent day of expansion today. Now, there were some rumors over the course of the weekend that, whether or not SpaceX would publicly IPO, or, Chamath Palihapitiya raised a possible point that maybe that Elon's going to do a reverse merger. That's his opinion, but those opinions definitely helped Tesla lift up a little bit today, because that would be very accretive to Tesla shareholders, of course, just absorbing SpaceX within the whole Tesla banner. But obviously those are unconfirmed rumors and just somebody's opinion so far, but that did contribute to some price action today. Now, the daily, right, rejecting from support down here, 430 down to about 415. And on the weekly time frames, which is the clearest time frame in my opinion, just looking for a higher low, right? Nice engulfing move, the breakout, the retest, possibly looking for the run. But I will remind you, Tesla has earnings in just about 2 short weeks of time. So I don't really think that we're expecting many big moves on Tesla much before earnings. Probably not looking for a massive breakdown, nor might you be looking for a breakout of the all-time highs. It might just stay a little bit soft here into the earnings and wait to hear for Elon's guidance into the rest of the year in terms of what they're doing with FSD, what they're doing with Optimus Robotics, how they're moving forward in terms of energy deployments as well. So all good things to look into for Tesla. I'm not personally positioning up here for a swing trade, but if I wanted to, if you're looking to play this, clear stop loss area, right? Stop loss would go below 420. And then you're just looking for expansion here back into the highs for a bit of a swing trade long. And now moving into Palantir. Palantir not doing much of anything, right? They're just trapped in the great wall of resistance and support right now. So no price action, right? No clear trend to be derived right now. 185 to 170 is the big consolidation range. I mean, there's been some ups, there's been some downs, but most of the price action has been confined to this location recently. The weekly tightening up, right? This kind of just looks like the QQQs, in other words, right? Just tightening up of price action right here. So Palantir, unfortunately, not getting much love, but at least while they consolidate sideways, it allows them to kind of grow into this very expensive valuation right there. So no swing trades on Palantir for me right now. I'm not also adding to my position. Any longs that you're making on Palantir right here, you got a clearly defined stop loss area 166, and you would just be looking for expansion longs into 210, 220, etc. Not the worst swing trade out there, right? It is an opportunity, so I figured I should kind of put it on the table for you guys. But also Palantir does have earnings coming up in the month of February, so please keep that in mind. I'm not adding to my long-term shares. Any adds to long-term shares up here from you guys, but you got to do it with a multi-year time horizon in mind, because definitely you're not getting the best valuation at current levels. Let's be honest. Will Palantir eventually be a trillion-dollar company? I don't doubt it, most likely, right? But will you have the same amount of gains as rapidly as people who bought back here or during tariffs? No, probably not. It'll probably move a bit more slowly moving forward. It's just the law of large numbers, right? It's a $400 billion company now. No longer is it a 40, 50, 60, $70 billion company anymore, right? Moving on to SOFI right now. SOFI down 3%. Getting tied up with the credit card news and all financials, right? I mean, it's not only SOFI, right? All financials went down today because of that headline. Even PayPal, which has like nothing to do with credit cards at all, even PayPal was down. SOFI was down, and SOFI actually, you know what's funny is Anthony Noto, the CEO, put out a statistic over the course of the weekend, right? Literally only 1% of SOFI's interest comes from their credit cards. So they shouldn't really be affected, but then if you can say rising tides lift all ships, well, I guess rising tsunamis sink all ships. I don't know what the opposite of that saying is, but anyway, SOFI just getting dragged down in the mix right here. I mean, it's a clear area of accumulation, right? In my opinion, we're currently battling between resistance 30 to 28 and below support 25, 22. You guys know my business plan for SOFI essentially is during this accumulation phase, I'm just selling put options down here, just writing put options 25 down to 22, collecting some premium. If they come down and assign me, no problem at all. I'm perfectly fine picking up some shares during this monthly consolidation phase for the stock into a very logical location. 12 EMA and previous resistance, current support around 27. Not the worst buy in the market. 1.1 price to sales, 1.1 peg, and a mid sevens price to sales. I do believe that SOFI does have a lot of room to the upside in coming years, but saying that you're going to get as rapid upside as somebody who possibly bought back here, probably not. But is their market cap going to appreciate as they grow their consumers, grow their products into a $40, $50 billion company? I do believe so, just maybe not as fast as, $10 to $30 was, right? No, it might just be a bit more slow, but so far the stock has lacked momentum for a better part of the last few months. So while it's here, it's an accumulation point for some shares if you wanted them, but also selling some put options down here. Not the worst stock to farm some premium on. Moving on to Uber right now. Uber down about 0.9%. Sadly getting rejected from resistance here. 87.5 down about up to about 91. It's the great wall of resistance, right? Resistance, support, 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 resistance. You can clearly see it's a big area of price action. These short-term bears have been in control of the weekly timeframes right now. The bulls are looking to reset these smaller timeframes, looking for the higher lows. A lot of space off the lows here, 79.80, right? We will see if they can come up and challenge this location. Uber with earnings coming up early February, so still some time. In the event that we come a bit lower here, once again, I will be selling some put options into these support lows. Solid area on the monthly, right? This whole 80 down about 75 location. Big prior resistance, current support, and just very healthy monthly consolidation, maybe before the next leg higher on Uber. Uber around 80 bucks. Decent if it's your type of stock. Low 20s multiple. Forward price to earnings, a 1.4 peg, and a 5.25 free cash flow yield. And last but not least, Taiwan Semiconductors. So TSM, 2.52% to the upside. They have earnings on Thursday, right? So literally any price action I tell you guys today is probably not going to matter, right? TSM after earnings usually moves about 5 to 7%. Obviously, 5-7% from here would put you well beyond 350 psychological, and 5-7% to the downside, because we know that last quarter they had ridiculously strong earnings, and the market still brought them down, which is why I always say earnings is a casino, right? So if we choose to come down, well, you might just be going for the back test of previous resistance here. All-time highs, 310 down to 301, would just be a bit of a back test here on the daily and also on the weekly as well. We know it's been a beautiful weekly uptrend of expansion on TSM. Might just be looking for a back test in the event that somehow the market drops this company after what I believe to be will be very strong earnings overall. Around 320, if we revisit that location, is TSM a buy? It's not a full-sized buy, but it is maybe a bit of a nibble here. Around 320, mid-20s PE, and a 1.34 peg with a mid-7s price to sales. So not a super cheap stock, but also not expensive. It's kind of right in the middle right there, which is why it remains a bit of a nibble for me. It's just for technical swing trades, it's kind of tough to chase up here. I'd like to see a bit of a discount. You guys know me, right? I like seeing tests of 12 EMAs for my swing trades. So would I be buying leap call options up here? Well, no, not confidently at least, right? Because we know we are somewhat extended here on the monthly time frame. That is in spite of very bullish, a very bullish year possibly on the horizon for TSM. Like if we're already in, I don't see a reason to sell, but starting a position up here, maybe not the best risk to reward in the market right now. And that is the full market rundown. Hopefully you guys enjoyed that. Now let's get into everybody's favorite segment, the biggest gainers and losers of the day. All right, so we're going to cover these a bit rapidly here. So the biggest losers, Abercrombie and Fitch, rejecting from resistance here, and management provided some guidance in terms of forward revenue outlooks. Only 6% growth. You can see that right next to my shoulder right here. Very soft growth, and blaming that off of a weak consumer and the impact of tariffs overall. So keep that in mind, which is why I say some of these retail names, guys, are very tough to play, right? You can make an argument for every one of these companies, whether it's this one, American Eagle. Some of you guys enjoy buying the dips on Lululemon. Some of you guys enjoy playing the quick service restaurants that have been down, such as Chipotle, such as Kava, or even some of the energy drink names like Celsius Holdings. Consumer retail is going to be maybe a choppy trade over the course of this year. So in the event that you wanted to avoid some of the choppiness, you can play the overall ETFs like XRT. That would probably be my favorite way of playing if I didn't want to choose individual companies here and there. I go for business models, right? When I'm looking to play consumer retail for a long-term portfolio, I go with a business model such as Louis Vuitton, which is 75 luxury brands, or TJX, which provides more for less. These are solid business models. Picking between individual names sometimes, like a Nike recovery story, or a Deckers Outdoor Brands recovery story, or a Chipotle same-store sales recovery story, can be quite profitable if you can hold the bag until the time where the companies actually start posting better and better revenues. But sometimes they're not the easiest trades to kind of hold, especially when you're in a market with so many clear themes right now, right? Consumer cyclicals is a nice theme for 2026, but it's not a certain theme, right? The certain themes for this year Number one, military defense spending, that's a given. The money is already there in the big, beautiful bill and possibly more into 2027. We heard that last week with President Trump wanting to increase the budget from 1 trillion to 1.5 trillion. That is a very clean narrative this year. Number two clean narrative, energy. These data centers will have a few bottlenecks. Energy will definitely be one of them. That is going to be another key theme this year. And number three, the second order AI plays, right? What do all of these data centers, what do they stand to? Which companies does this AI expansion tend to benefit, right? So second order plays in terms of AI, whether those are various networking components, whether they're the photonics components. A lot of companies have been getting a lot of interest recently in the photonics department. That's just basically fiber optics in replacing copper in terms of some semiconductor chips and things of that nature. Hot narrative. So second order AI plays and even some little software plays like UiPath and things of that nature, right? So you have some clear themes this year, plus just the same classic AI themes that we've been saying. So there's no need to play these consumer cyclical names, but if you wanted to play them, maybe if you don't want to pick and choose, an ETF could be the best way to kind of play with them, because we know a lot of these brands, guys, a lot of these brands are like big recovery stories, right? Like Lululemon's going to have to get back their comps, right? They just had terrible sales comps, over the course of the past few years, essentially, and the brand is kind of dwindling. Nike is a massive recovery story as well. So if you want to put your money there behind Tim Cook and behind Nike CEO, who also bought shares, you're free to do so, but they may just not be the obvious trades, right? Or we can just go for Amazon. Amazon is easy consumer retail. I mean, if anybody stands to benefit from the recovery of the consumer, probably Amazon or even some companies like this, Affirm. Buy now, pay later. Also, one of my favorite names heading into 2026 if we're trying to play the consumer. If I'm playing the consumer, I'm playing broad and I'm playing wide. I'm not going into one play. I'm trying to hit plays that tackle kind of everything for the consumer, right? Either for a business model that performs really well with many different brands under it, or I'm looking to play more broad, like Visa, MasterCard, Affirm, Amazon, things of that nature. Affirm down here, low 70s, decent pickup location. They got hit for no reason. They were up this morning, then the algorithm sold them down, right? You would tend to argue that if people are going to be pushed out of credit cards, because we know, if banks are only able to charge 10% interest rate caps for their clients, well, obviously they will not be able to give credit cards to the lower end of the consumer because the break-even calculation doesn't make sense for them to do so, right? So maybe that pushes people to other means of credit, such as personal loans or buy now, pay later. So, Affirm, just in a bubble, like in absolute terms, Affirm, even without this news, is positioned really well into this year overall. Still one of my probably one of my favorite picks into this year. If I'm looking to play consumer recoveries, Duolingo, down 160 in a support right here, 170 down to 134. This stock, let's just say it for what it is, has been an absolute disaster. And this is the byproduct of negative sentiment sometimes, guys, right? When the AI narrative comes for you, it comes for you hard, and then the business needs to spend several quarters undoing that narrative by continuing to post solid earnings. Now, nobody is saying that Duolingo doesn't have strong revenues, but what management said last quarter definitely didn't help them. They basically said, yeah, we're going to stop focusing on monthly active user growth and get our members more engaged with our platform. Wall Street didn't really like that, right? And as a result, Duolingo has been doing nothing but go down. So once again, if you're buying this one, you're buying it for a tremendous recovery story. Is the valuation down here at 160 somewhat more manageable? Yes, but you're battling sentiment. It is weekly oversold conditions. It's arguably daily oversold conditions. Again, the monthly has absolutely been destroyed, but let's be honest, this will not be a very fast and quick path to recovery at all. So play it at your own risk, that's for sure. Name like PGY, I've highlighted this one several times on the channel over the most recent few days. This is quickly becoming one of my favorite fintech small cap plays out there. It's a $2 billion company, but look at the price to sales, right? A few key metrics right here. Number one, monitor the EPS flip. We're going from negative to positive EPS. That's when I start paying attention. That's when the institutions start paying attention as well. And very solid revenue, right? For this upcoming year, 1.5 billion in revenue for a $2 billion market cap. This is an AI company. It just match makes, different loan providers with different clients overall. They do not hold any loans on their books whatsoever, which does lead them to have a better possible profit profile than something like an Upstart, which offers similar services, but arguably Pagaya does a bit of a better job here. We are noticing some time frame shifts right now. You can see some bottoming out action off the lows right here. Support 20 down about 17. Usually I put a box there, but I just put 2 lines. You can clearly see it though. They're looking for the expansion, right? Could be very interesting. Pay attention. MACD cross. So this is one that I'm playing for a bit of a swing trade long overall. So keep that one in mind if you're looking for something. Today's opportunity was a pretty decent backtest of the EMAs, just getting brought down with the rest of financials for no specific reason. Other names such as Qualcomm, I mean, pay attention to these guys, but you know, they haven't really done much because this is the whole analog sector of the market for semiconductors. On Semi, Qualcomm, Texas Instruments, you know, MCHP, they're still the same companies overall. These are companies that we've explained many times what's happening with them, right? There was a big pull forward in demand 2021, 2022 with low interest rates, everybody buying consumer electronics and things like that. Then you came into the dwindling of sales because a lot of these companies are focused on the consumer, right? Either through consumer electronics or automobiles, or even the Internet of Things for industrial applications. And none of those segments have really been doing that well over the course of the past 3 years. But maybe they will be in the second half of this year. Now, they are not my favorite semiconductors to play. I would much rather play something like a Marvell, which has direct AI exposure, which is still somewhat low right now, right? In the lower 80s range. Not a bad location for Marvell. This one's come down over the course of the past few quarters because of management's timid guidance. You know what this one reminds me of? This one reminds me of AMD back here, and it also reminds me of ASML back here, right? Nothing was fundamentally wrong with the business. However, management's inability to provide accurate timelines and their timidness on earnings calls hasn't done the best for the stock over the course of the past year, but the fundamentals for this business are very clear. Now, Marvell does have exposure to the consumer segment as well, but their AI push is going to be quite significant. There were some rumors as well over the past few months that they were going to lose Amazon as a client to Broadcom, but that turned out to be kind of fake news. All analyst price targets clearly above. EPS is getting into the big expansion phase. This is why it reminds me of AMD or ASML, right? Big expansion phase coming. But since management hasn't been able to say which quarter was going to be the breakout quarter for them, first it was supposed to be second half of 2025. Now it's supposed to be second half of 2026. So an accumulation period for Marvell, probably one of my favorite names in semiconductors right now, that AMD, NVIDIA, and maybe even Broadcom to the upside. Moving on a little bit further down here, American Express, solid company, but for me, this one has to be a buy down here around 330. We cover their earnings every single quarter. We will cover them again when they have them in about 2 weeks worth of time, but not a buy for me just yet. I'm just holding all my long-term shares. If I want to buy any more, probably looking for a 12 EMA backtest down there, 330. Moving down the list here, Ondas doing a little bit of a capital raise, $1 billion worth. This one was fire starting off the new year, right? From 8 to around 15. That's 81%, guys, in like 2 weeks. So it's like, how much more do you want a straight line? Maybe we just consolidate a little bit. Next area to pay attention to would be the back test of 11. Looking for the good old breakout weekly retest here. And you do have a few key levels. I know the price action from back then is very choppy, but that is pretty much where most of your price action kind of sits, between 11 and 10. Maybe if we get a revisit, I might be looking to play, but I'm not going to chase it all the way up here overall. But obviously a name that it's very popular right now on social media avenues. Is there anything more here on the lows? I don't think so. I think that's probably everything that I did want to cover. Oh, by the way, Visa and MasterCard for me are just clean buys in my opinion, guys, down here. Very clean buys. That news is probably a non-factor. Keep in mind, Visa and MasterCard are only networks, right? They're networks. They don't generate any interest. No, that's the banks, right? So when Trump is talking about, 10% reductions here on credit cards, that doesn't affect Visa and MasterCard because they're not the ones collecting the interest payments. Those are the banks. Now, there is push and pull forces at play here, right? In the event that the banks are not able to issue as many credit cards to lower income consumers because of that interest rate cap, you can assume that Visa and MasterCard may lose a little bit of volume. That's a negative force for these stocks, right? The positive forces are still that they remain very large duopolies, right? With almost untouchable business models right now. And for the rest of consumers that have credit cards, well, if their rates go down to 10%, you could possibly see an increase in volume to that side of the consumer. So you have one negative force and then one very positive force. Obviously, it's tough to say which one's going to win, but if I decide with one of them, probably very bullish in terms of these for the upside for the long term, because they're trading at very low valuations right now after a year worth of accumulation at a similar range. Very bullish. These dips on Visa and MasterCard, in my opinion, are definitely buying opportunities. I think that's pretty much everything to the downside. Now we can talk about some names to the upside. We'll spend some time, a bit more time. I guess I've gone a little bit over an hour here, but still, we'll spend some time on this biggest gainers and losers list. And then as the week progresses, we'll spend a bit less and less time on them. But look at these names, guys: CoreWeave, NBIS, and IRN. Now, we are very clear on the channel by saying that these periods of consolidation were the periods in which we were looking to build some positions. And we kept using Oracle's chart as a proxy of this, describing the landscape right now. Previously, end of 2025, we had the massive funding phase for all of these data centers. That's when you saw the massive rallies, August, September, and October. Now we are in the execution phase. We haven't seen many big deals from big tech recently. Not as much money is being thrown around. The end phase is end of 2026, early 2027, when all these data centers become operational and start generating actual revenues. So here is the build out phase. And during the build out phase, we've had a lot of noise. And usually when you have a lot of noise and big consolidation phases, that's when we kind of want to be buying for the next phase, right? So that being said, are these companies still attractive locations to buy? Yes, but you got to have a very long time horizon. Why? Because this segment is still a ways away, right? So short-term price action can still be very choppy, but is it a nice accumulation range for either CoreWeave or NBIS or IRN or CIFR or APLD, which just had their earnings? Yes, it is, provided you are investing with a longer-term time horizon. So please keep that in mind. Moving on to BABA and some of the China names. Beautiful breakout by BABA here, almost textbook breakout, right? We were talking about this recently. The good old monthly breakout retest of support. They perfectly backtested it 146. Now you have the breakout trade, and now you have a tradable bottom, right? So I know it lifted very fast, but there can be a stop loss area derived right here. And if we are looking for expansion of this one, well, you're probably heading to first stop 190 and then second stop all the way up here about 229. Looking very good. If you didn't want to play BABA and you wanted to play KWeb as a whole as part of the China expansion trade, KWeb also looking really good. China could be interesting as a narrative to play into 2026. So pay attention to those overall. They're looking quite good. BABA breaking out today. Baidu also breaking out 6% to the upside, looking very strong there for the monthly leg of expansion overall. A lot of these China names are still trading, you know, at a bit of an undervalued location. UiPath is one of my favorite plays leading into 2026 as well. They're part of the whole RPA segment of the market, robotic process automation. They're like Palantir's little brother, if you want, in other words. That being said, down here, 17 out of 15 is my accumulation range. They had fantastic earnings, came back, gave us accumulation re-entries, and we are just looking for continuation maybe of weekly uptrends into resistance, and maybe even the continuation of the monthly push up here into the $20 range. Path, decent opportunity for you guys to be looking into. Even some of the battery plays, right? Whether it's EOSE, FLNC is my personal pick. I'm in this one. Still good opportunity in this one as well. $4 billion market cap right now. And you're looking at phenomenal sales pipelines for this business over the course of the next year, guys. Big sales will be accrued by these companies. You know, there's other ones as well. We can talk about Enersys, right? This is a whole battery trade. Overall, right? This one is broken out, clearly institutional support right there. There are many ways to play this one. Even Bloom Energy is back to its highs right now. So these are still very interesting plays leading into the rest of 2026. When they've ran that hot though, especially names like this, you kind of want to be waiting for some pullback locations, but definitely the energy trade, guys, is should be front and center for all you guys. I'll give you guys some ideas. The Discord members that we have obviously know about more plays, but I'll try to give as many plays as possible on the YouTube channel just to kind of give you guys a bit of a hint and a bit of a path as to what you should be looking for. But energy, whether you want to play it through the utilities players, right? Like the Vistras of the world, the nuclear players, Constellation, right? Whether you want to play it through battery storage or possibly small cap solar, like we have TE Energy from all the way down here. Any backtest down here would be a great reentry opportunity for this company. Pay attention, guys. Pay attention because energy is going to be front and center. But there's also many other interesting plays like Vertiv right there that provide cooling solutions for the data centers. very nice accumulation range. Vertiv could be very interesting, guys. After months of consolidation, could be really interesting for a further long. And the same could be said about a company like ANET, which is networking solutions, right? Breakout, retest, and possibly long. ANET, Vertiv looking very strong. Even companies like Credo. Credo is one of my more recent positions. We kind of bought in to these support lows. Even Credo, right? Looking very good. Finally, the breakout retest of the 12 EMAs. Backtest of support as well, looking very interesting for some possible further growth into 2026. So there are many data center opportunities if you just broaden your horizons out a little bit. And I think that kind of really encompasses everything that I wanted to talk about today across many of these players overall. So please keep all of that in mind if you're looking for narratives to possibly play, right? Last week, we did a lot of the defense corporations. You might remember me saying, playing a game of, is it too late? A lot of these companies, guys, you're paying all the money up here, right? If you're buying KTOS up here, if you're buying AVAV up here, you are literally paying all the money for these trades, meaning the risk reward is no longer favorable. You miss them, you miss them. It is what it is. Now wait patiently for the back test or broaden your horizons into other narratives of the market, maybe that haven't ran so much. Such as some of the names we just presented, right? Credo is still somewhat early for possible re-expansion. VRT possibly a bit early. Energy plays like Vistra, still early for the re-expansion trade, right? ANET, still early for the re-expansion phase 2. Right? There's so many names and so many narratives to play that you don't have to really lock yourself into the ones that are just, you don't have to chase highs, essentially is what I'm saying. There's something for everybody in this market. And hopefully by reviewing these names, I've been able to convey that to you as well. So keep all of that in mind. We'll cover more of these names as we move on throughout the rest of the week. That is everything for your overall market rundown. Now I'll spend a very brief 5 minutes or so going over the portfolio for the trades that I have into this week. So in terms of the plays that we have in the portfolio, well, nothing much has changed. We still have the same long stocks that we've held for a while. We still have the Kraken shares that we bought under $4. That is a robotics/military play. Kraken looking pretty good if you guys wanted to do your own research into this one. They have a direct partnership with a very popular company, Anduril, looking very good, up another 6.5% today. Not early anymore, but arguably not late. If I were to try and position in this one, I would probably wait for a pullback, which is probably only going to happen if a lot of the defense companies have a bit of a pullback. Very extended on the monthly RSIs, obviously, extended on the weekly RSIs as well. You got some divergence right here. So I am in this one. And, I can even tell you, right, that it's probably ripe for a pullback soon. Moving on further, we got the assigned shares of Netflix, which you're still sitting on. I'll probably be writing covered calls on these into earnings, but a bit too far away for me to write covered calls as of right now. Still waiting for one of two things on Netflix, guys, for this assignment, right? It is too far for me to write covered calls, but it's also a bit too far away from this area down here to write some new puts to DCA into the trade. So I'll probably wait until earnings and see what we can get for that trade overall. Moving on, we have the UiPath shares that I'm just holding as a bit of a swing trade. And then we have TE Energy, which has been one of our better performers across many different portfolios. And here my cost basis is 410. In some of my other personal portfolios, I have costs ranging between the $3 and $4 range. I got about $15,000, $20,000 total in this name. Probably one of my favorite ones, but as I said, right? PE, if it does come back down under 6 towards 5, that's probably the reload location for this vertically integrated solar play. The long options, guys, are exactly the same. Nothing has changed here. We still got the grab leap options for December 2027, $7 calls. The Bitcoin calls, 75. That's around $100,000 per Bitcoin for June of 2027. These are leaps, and yes, they are underwater since Bitcoin's been doing nothing, consolidating in the low 90s. UiPath, we still have these leap call options that we started about a month and a half ago. They're still profitable to the tune of 36%. Not looking to add any more right now. If we do drop down to $14 per share, maybe I'll add a bit more, but for now, I'm just holding the shares that I have here for a swing trade long and also the leaps in combination. Sentinel-1 was a trade that we started about 4 months ago, and we had to DCA this one about a few weeks ago, end of December. Still underwater as cybersecurity still remains very weak, whether it's Sentinel-1, whether it's Rubrik, whether it's, CrowdStrike, whether it's Palo Alto Networks, right? Let's look at all these charts. They all look the same, right? Consolidation and just a downside bias. Zscaler, Datadog, right? All of them have been in a very long consolidation phase since the month of November. So I think it's going to be a whole sector that has to rally up higher, not just one name. And as a result, my Sentinel-1 plays down there, and even my rubric leap call debit spread here, they just haven't been doing so well over the past 2 months, right? Very small positions in the scheme of the portfolio, but still slightly losing positions nevertheless. Visa, this call has been pushed and pulled either which way over the course of the past 2.5 months that we've held it. June 2027, 320 leaps. They are now back to being underwater after today's decline, but I'm still very bullish on this position and this company, so I will maintain these. Now, if you take a look at the leaps down here, AMD, a lot of them have been doing a bit better recently. AMD, I mean, we're still up on this trade. We got a lot of time. December 2027, bull call debit spreads, 165, 300. Amazon, same concept. We've had these from the tariff lows. December 2027, 160 to 300 expansion. Looking for that expansion. Pretty good. They're up 50%. Credo is a recent swing trade that we started last week. 155, 165 call debit spreads. These are expanding nicely, 20%. We'll be looking for this one to expand into the 170, 180 price range before seeking to take any profits on those. A lot of time on these. CoreWeave, this one we've had for 5 months, arguably at this point, 5-6 months. December 2027, 135, 280. They're currently 10% underwater. Obviously, we started these when CoreWeave was like 110. So we're still underwater, but we've got so much time there. FLNC is also a trade that I started about a month ago at this point. Once again, leap call debit spreads, January 28th, 25 to 37, $12 wide, and it cost me $1.85. That's a very solid risk to reward ratio. It's like a 7-to-1 risk to reward. They're up nicely right now, but a lot of time left on this contract. Obviously, we're looking for this one to expand into the high 30s. NBIS, this is one we started 3 months ago for our first contract when NBIS missed earnings, or rather, they had good earnings, but the market sent them down nevertheless, right? Right here is when I started my first position on NBIS. Down here about a month ago is when I DCA'd. And as of right now, this position has climbed back to being in a profitable status. 140 to 200 bull call debit spreads, December 2027. You'll notice a lot of these bull call debit spreads, guys, they're in two reasons, right? Number one, to save capital, because it is a smaller account. I can't just buy straight leaps on everything. But also when you have very high implied volatility, sometimes the debit spread is a nice way to get very good risk reward. See here, like it's a 60 wide bull call debit spread, and it only cost me, average cost right now is about $9. So, the risk reward on that is like 5-to-1, right? We're paying $10 and we get $60 worth of upside, right? So it's like 5-to-1 total profit to cost overall. So looking pretty good there. Netflix, we've bought these about, when Netflix was around 100, we bought them recently as well. End of December when the stock pulled down a little bit more. We bought these first, we had a first buy around here. And then they got hit with the Paramount deal, obviously. We bought the second batch around here, end of December. I forget which exact date. And now we've kind of DCA'd, and now that's pretty much all I will give to Netflix for the moment. December 2027, 114 to 180 bull call debit spreads. 1477, we're down 35%. So this one right here and our Netflix shares, this is what's kind of been holding the portfolio back a little bit. Other than that, there's not too many large losses overall. I mean, unless it's Bitcoin, right? It's really just been Netflix that's been underwater for us. NVIDIA, we got the December 2027 190 versus 330 bull call debit spreads. Those are 7% higher, but we kind of got them when NVIDIA was 175 about a month ago at this point. I believe it was late November that we got these. It just hasn't done anything, right? But obviously, if we get the expansion leg, I'll be looking to wind these down, probably mid 250s if we can actually get there. If we get some nice expansion. And the rubrics, we already spoke about them. They have solid earnings. It's the fastest growing cybersecurity name by revenue year over year, but the entire sector has been somewhat unfavorable. Now, some of these so those are all the leaps. Nothing's changed there, right? You guys are probably familiar with these if you've been following the channel for a while. So the portfolio is doing okay. We're up decently for the year so far. I guess we're up like 4 or 5% on the year so far. Not too bad, but nothing crazy to scream home about. We've been doing really well on our short put plays in the most recent few weeks as well, right? So take a look at the portfolio right here in terms of the December 29th, January 9th period. Really strong wheel trade performance, right? We closed some directional trades either for tax losses. You may remember I had the Meta one we took for last earnings. It was dead. The Resolve trade, this was also a lottery play. We closed that one for a tax loss as well. Very small loss right there. And there was a grab earnings play for call options. Super small loss, like a $60 loss. Nothing big, but I journal all my trades right there. And a few directional trades that we closed for lack of follow through into the new year as well. CRM and Adobe, namely speaking, right? So CRM just not doing anything. We close this one here. I tried to allow it to go for the breakout. It didn't want to do it, right? I also allowed Adobe to go for the breakout here. It was looking good into the early portion of the year. And then January 2nd, they hit us with this candle, erasing all the bullish momentum. So I was like, no, that's enough. I closed those 2 trades and I replaced them with Credo, which had a better entry and arguably a better narrative behind it. So far, the swap has been good for us, but I figured I should update you guys just for the few losses that I kind of locked in these 2 to reposition for something a bit better, in my opinion. And these were just like tax loss harvest before the new year. Other than that, all the short put plays, they've all been very good to us, especially over the past 2 weeks. We made a lot of money in premium, and that is continuing into the new positions that we have. Apple, this one was open last Thursday, I believe. We got this trade, 250 short puts, January 30th. I'll be looking to pull forward a bit more premium. We're already up decently on this contract. If I can see 50% or better within the next week of time with a bit more of an Apple bounce, I'll wind this one down. I don't want to stick through this one because it does put me through earnings. I'll look to wind it down and pull the premium forward. CP is a value name that we brought up many times on the channel so far. 72.5s for this Friday. It's a good counterbalance trade. You guys see I'm very tech heavy right now. If I get assigned on CP, this very boring railroad company, a 4 years worth of support, I'll take assignment here and I'll run covered calls. Not too nervous. That expires this Friday. We're underwater a little bit on it, but we're very close to our assignment price. Marvell is a trade that I opened last week. I also gave it to you guys on the channel too. 78 short puts for this Friday. We opened this one last week. Into this week, we got 75 cents for them. They're like 50% profitable. We can close this one if we want to. I don't mind holding it a bit further for a bit more profit. UiPath, we opened this one last Friday. At the end of the day, we got about 20 cents for them. This is January 23rd. So 2-week contract, we got over 1% for them, and they're 50% profitable plus right now. We could wind this one down, but I wouldn't mind holding it for a bit more. PGY, we took this one today, this morning, 22 short put for Friday. This one only has monthly options. I would not mind being assigned on PGY. As we covered earlier, even if I'm assigned shares here, I might just not wheel out of them right away. I might just look for a bit of a cheeky expansion phase before getting rid of those shares. But suffice to say, we picked the lows on this one this morning. We got it for about 37 cents, and they're currently about 60% profitable. That was an easy trade this morning. We got the rubrics as well, 72 short put. We opened this one about 2 weeks ago at this point in time. 72s, we got them for 80 cents. They're underwater a little bit. Rubric, I mean, it's close, right? It's close to 72 right now. I don't know if I get assigned, but at least if I am assigned, I'm assigned into big support after very nice earnings, so I'll take it. And then obviously we have some SOFI. SOFIs we got last week. These are hovering around break even right now, 25.5, same classic location. And that's pretty much everything, guys. You know what I mean? So very standard trading, nothing crazy, just the replacement of a few unprofitable call debit spread, short-term trades, CRM and Adobe, which had expirations in February. I didn't have that much time on them, and the trend was just not breaking out. I replaced them with Credo with a lot more time, with a better narrative. So hopefully this trade makes up for those 2 small little losses. And then we're just holding the same leaps, same share swing trades, and just rotating the capital for the wheel overall. So that's how I'm positioned into the rest of the week. You can see it's somewhat diversified, right? I got a little bit of everything, a little bit of cybersecurity, a little bit of consumer discretionary, a little bit of big tech in here, a little bit of semiconductors, and a lot of different ways of playing leaps, either through various forms of energy trades like TE or FLNC, or various data center plays like CoreWeave and NBIS, or some big tech names like NVIDIA, Netflix, Amazon, AMD, et cetera, et cetera, et cetera. So we got a little bit of everything here, and even a little bit of crypto, although this crypto trade hasn't been doing too well. But that is everything for that small little YouTube portfolio. We'll see what we do over the course of this year. I think we're pretty well positioned this year overall. Keep in mind, all of these leap call options, this is like phase 2. We made a whole bunch of money on leaps last year in phase 1, which was pretty much like tariff lows through like October. I closed a lot of those. You might remember we had huge gains on Google, on Uber, on Affirm, on KWeb as well, on Rocket Mortgage. We had some very profitable leaps there. So, you know, we had AMD part 1. This is now AMD part 2. So many profitable leap plays. These are now all the second batches of leaps that I've bought either October, November, or December. And we're kind of carrying through to the expansion phase for these respective plays right now. So keep that in mind. But that's everything I had for you guys today. So the videos moving forward will probably be shorter in nature, although we do have earnings to cover. But that's everything I had. So hopefully you guys enjoyed it. If you did, consider dropping a like. Would appreciate it for the growth of the channel. Consider subscribing if you're new as well. Would love to have you back. We do these every Monday to Friday after the close. And last but not least, if you have any questions, feel free to leave them down below in the comment section. That's all I had for you guys today. Have a great day in the markets tomorrow, and I will see you tomorrow after the close. Peace.